Your bank is stealing from you right now. $15 a month just to have a checking account. $35 every time you go a few cents over. And your savings? They're paying you basically nothing while they take your money, lend it out, and make billions off of it. But here's what they'll never tell you. There's a way to flip this, to make the same bank that's been stealing from you start paying you instead. No fees, better rates, better rewards. Same bank, same products. You just need to know the exact amounts that trigger the switch. Let me show you how. But first, you need to understand something about the way this system actually works. The financial system doesn't charge everyone the same price. It runs on tiers, invisible thresholds that determine what you pay, what you earn, and what you're allowed to access. And the uncomfortable truth? The less money you have, the more expensive everything becomes. Not a little more, dramatically more. It starts with the fees your bank is quietly charging you. From there, it moves to your credit score and the invisible tax it puts on almost everything you buy. And once you see how those two work together, you'll understand why the wealthy don't just pay less, they get paid. And by the end of this, you'll know exactly where you stand and what it takes to reach the next level. It starts at your bank. Keep $150,000 at Chase, and you pay zero fees. You get a personal banker, priority service. But if your balance is low, $15 a month, just for having an account. That's $180 a year, charged to the people who can least afford it. Then there are overdraft fees. 9% of bank accounts generate 79% of all overdraft revenue. The banks know exactly who's living paycheck to paycheck, and those are the accounts that are most profitable. But the real cost runs deeper. People without bank accounts spend roughly $40,000 over a lifetime just on check cashing fees. Not on products, not on investments, just on converting a paycheck into usable cash. The system charges you for being at the bottom and waives that fee the moment you don't need help anymore. And most people don't even notice because they never look at what their bank is actually charging them. Which is exactly why we built Wally. Just upload your bank statement as a PDF or snap a picture of a receipt, and it pulls out every transaction, every fee, everything your bank is quietly taking from you. It's free to download, link in the description. But the fees are just the beginning. Because there's a 3-digit number that determines something far more expensive. Your credit score is supposed to measure risk. In practice, it works more like a price tag attached to your identity. Take a $300,000 mortgage. That $73,000 gap comes down to credit. 6.5% versus 8.5%. $203 extra per month. A car payment, just in interest. Buy a $35,000 car with deep subprime credit, and you'll pay nearly $11,000 more than someone with good credit. Same car, same dealership, wildly different price. But here's where it gets absurd. A safe driver with bad credit pays more for auto insurance, sometimes significantly more, than a driver with a DUI but good credit. Your financial history is literally considered more dangerous than drunk driving. And it doesn't stop at loans. Bad credit follows you everywhere. You pay more to rent an apartment. You pay more to turn on your electricity. You even pay more for a cell phone plan. And in over half the country, employers check your credit before they'll even hire you. Your credit score isn't just a financial tool. It's a filter that determines how much the world charges you to exist. And the irony? The system that penalizes you for having less money also has a mechanism that pays people back, but only certain people. When you tap your credit card at the register, the merchant pays a processing fee, usually 2 to 3%. That fee funds the rewards for premium credit card holders, which means every time someone pays with cash or a basic debit card, they're paying the same inflated prices, but getting nothing back. The reward system redistributes about $15 billion a year, and it flows one direction, from people who spend less to people who spend more. Premium cards return 3 times more value at higher spending levels, and at the very top, the Amex Centurion card costs $10,000 to get in the door, $5,000 a year after that, and requires $250,000 in annual spending. The system literally pays you back, but only after you've proven you don't need the help. And that pattern? It's about to get much more dramatic. This is where the tiers really start to separate, and where the pattern from every section before this plays out in the clearest way. Chase pays 0.01% APY on a standard savings account. High-yield accounts pay over 4%. That's a 400 times difference. On $50,000, that's the gap between earning $5 a year and $2,000. And the higher your balance goes, the better it gets. CIT Bank pays 0.25% under $5,000. Cross that threshold, and your rate jumps to 3.75%. 15 times more. Same bank, same account, just a different balance. That same pattern shows up in investing. Put $3,000 into Vanguard, and you unlock Admiral shares, index funds with expense ratios of 0.04% versus the industry average of 0.44%. Over a career, that gap compounds into tens of thousands. But the real divide? At $1 million in net worth, you qualify as an accredited investor. Hedge funds, private equity, venture capital. Investments that have roughly doubled the S&P 500's return over 20 years. And only 18% of households qualify. They control 79% of private investment wealth. The best returns are locked behind a velvet rope. And the key is a balance sheet. But even this isn't the top of the ladder. Everything we've covered, the fees, the rates, the access, those are levels in the system. But at the very top, there's a completely different game. It's called buy, borrow, die. You build a portfolio, stocks, real estate, whatever. Instead of selling and paying capital gains tax, you borrow against it. Banks lend you money at 5 to 8% secured by your portfolio. You live off the borrowed money. Your assets keep growing. And because borrowed money isn't income, you pay almost nothing in taxes. The average American pays 21% interest on credit card debt. The ultra-wealthy borrow against their investments at a fraction of that, not because they're broke, but because they're avoiding taxes. When you die, your heirs inherit those assets at current market value. All those unrealized gains, the tax bill disappears. This one loophole, the stepped-up basis, costs the government $58 billion a year. The 25 wealthiest Americans paid an effective tax rate of 3.4%, while their wealth grew by $401 billion. Jeff Bezos paid 0 federal income tax in 2007 and again in 2011. The system doesn't just reward wealth. At a certain point, it stops charging for it entirely. So what do you do with all of this? The first instinct is anger. That's fair. A system where the poorest pay the most and the richest pay nothing? That's not an accident. It's architecture. But here's the thing about architecture. Once you can see the blueprint, you can navigate it. You might not play the buy, borrow, die game tomorrow, but you can move your savings to a high-yield account this week and earn 400 times more. You can push past the next credit score threshold and save thousands on your next loan. You can cross the $3,000 minimum at Vanguard and cut your investment fees by 90%. Every invisible line we talked about, they're not walls, they're thresholds. And now, you know where they are. The best first step is the simplest one. Know where your money actually goes. Because you can't cross the next threshold if you don't know where you're starting from. That's exactly why we built Wally. It shows you where every dollar goes, without linking your bank account, without selling your data. Upload a statement, scan a receipt, or log it manually. 30 seconds. And it gives you the one thing this system is designed to keep from you: clarity. Link in the description.